This is Chris from thetraderguy.com taking a look at the charts during the November 7th session. Chart of the day is the Australian dollar. It's been a while since I've done one of these, but I finally have something to look at that's interesting. And as you can see, the Australian dollar has essentially topped out at the 105 level after initially rising post the Obama re-election. And it looks like the markets have thought better of it. There are a couple different things going on. We have Germany possibly slipping into recession. That was Europe's last hope, for a lack of a better term. Negative news feeds upon negative news. The indices are down. It is currently just before noon New York time, and we're looking at a drop of 50 cents in silver. The Dow's down 350 points. S&P's down almost 40 points. Oil is down $4, almost $4, I should say, and on and on and on. We're seeing all of the indices across Europe selling off, with the exception of Denmark. That is probably because the Danes, of course, keep their own currency. Now, having said that, all of this going on, the technical setup is starting to look more and more like a shooting star. We have a nice consolidation area over the last 6 months, almost roughly, that we've been going back and forth in the Australian dollar between the 102 and the 106 level. You see that I have the 104 level, and a lot of times you will see this on a consolidation rectangle like this, a larger one. There is an area in the center that gets affected. It's a midline, if you will. Those of you who are familiar with my box trading will have heard me say that more than once. But you can see that we are essentially bouncing off of this midline from time to time. But the bigger picture is the 102 level, of course, at the bottom, and 106 at the top. Well, now we have a situation where we've hit the bottom again. We've come up, and it looks like, and it's a little early to say, but it looks like we could be rolling back over. This is normally the first sign that you could really be running into some trouble. A lot of times this will lead to larger moves, but nonetheless, it does look like a sub 104 move is probably going to push this pair much lower. And it makes sense. This is a risk on, risk off pair. It looks like risk is off, so people run into Treasury and get out of things like gold or Aussie stocks. Quite frankly, we'll have to wait and see, but more than likely somewhere right around the 103.80 level is going to be the trap door. Once that lets go, the party's over for a while at least, and we will more than likely drop to test the 102 level. For more videos and a ton of free video lessons, come to the traderguy.com. In the educational forums, all of it's free. It's there for the taking, and we have a forum where you can discuss things, and of course you can always email me at chris@thetraderguy.com with any questions. Thank you.